evening, ladies and gentlemen. Welcome back to Walk the Block, where you're navigating digital finance. I'm your host for the evening, Zenith. It is a pleasure to be with you, and we have a pretty packed show tonight. A lot of clips to go through, but there's really big topic that we're trying to discuss, which is which way's the market going? And, well, I happen to think that there is a news event coming up or a potential news story that could really help determine what way is that going. And then I have a plethora of people that have been coming out of the woodwork and actually proclaiming that, nope, things are going to get better. And then also, some more of the naysayers that are saying, nope, things are getting worse and the bear market is actually setting in. All that aside, it's pretty much about what you can expect around these times, especially considering we're still debating 4-year cycle. And yes, that will be part of the show tonight a little bit, but at the same time, trying to give you guys a quick update on what's going on with the markets and what's going on with the world as well. The first big story of the evening tonight, though, yes, I'm a bit of a legal and government analyst over here, so I am paying attention to what is arguably possibly one of the biggest crypto stories so far for 2026, which is, well, the Clarity Act, or, well, what I would say is that we were supposed to vote on it this week, but it just got punted back, and it's always great when you do an entire prep for a show talking about a bill, only to find out 2 hours before you go live that nope, 2 more weeks. And yes, they literally gave us the 2 more weeks thing here. So it's coming to us from being in crypto. The Clarity Act delayed again as the Senate lacks votes for crypto reform. Well, as one of the pretty much rules of politics is don't vote on something if you don't have the votes. And, well, it would appear that that might be the case in this one. But with that being said, let's see what we got going on. The U.S. Senate has delayed a critical step on the Digital Asset Market Structure Clarity Act, raising fresh doubts about whether Congress can pass long-awaited crypto rules in 2026. No discussion on Crypto Clarity Act until 2 more weeks. There you go. 2 more weeks right there coming to you. Pretty much what happened is that the bill, as it stands right now, was passed through the House of Representatives back in May or late May, early June, of 2025. It has been delayed, partly due to, remember that 46 days of the government shutdown? Yeah, that'll do that to it. Additionally, there have been a bit more pressing topics to address as well. So that's why we're kind of seeing this one. So pretty much we got 2 more weeks before it goes to markup and vote. What's going on is that a bill was passed in the House. The Senate got its hands on it, and, well, they've been doing some markups, possible modifications, all that stuff to get it to their liking. At that point, it will then be voted on in the committee. This is the Senate Banking Committee, which pretty much all crypto legislation goes through at some point or another, or most likely just originates there in the Senate, but it does have to get there through the House first. Bills do have to originate in the House. Anyways, what's going on with that, though, is that we have seen a bit of a shift with what's going on with it. Specifically, what are the probabilities that it's actually going to happen? Like I mentioned previously, this has been going on since about mid-2025. So last I checked, it's now the year of our Lord 2026, meaning it's been a hot minute. And as it stands, Polymarket is doing a great job of showing me how the news affects the real-time odds of the market. So earlier today, yes, that is today, it was sitting at 80% yes to pass, and then it dropped all the way down to 63, and we've recovered somewhere around this 68 level. So pretty much what it's saying is, like, look, the more this thing gets kicked down the road, the less likely it's going to be signed into law in 2026, which is what the question here is asking. Okay, so let's see. What is this thing? Well, it was supposed to be voted on the 15th, which I believe is Thursday, yes. And it's pretty much a crypto rulebook aimed at killing fake volume, wash trades, and shady reserves. We're going to flip back over to our article here. They do a decent job. Under the Clarity Act, crypto would receive formal legal classifications. Some tokens would fall under the SEC securities laws, while others would be treated as commodities overseen by the CFTC. This is pretty much the big split that has been going on with this bill. This bill primarily tries to identify who's responsible for this, because if you remember in the past, under Gary Gensler's leadership, crypto was heavily under scrutiny, and we were getting lawsuits left and right. That's been a very different story under Paul Atkins' leadership at the SEC. But at the same time, though, it raises the question of what is a security? Is crypto a security, and where should it fall? So trying to figure out who's actually in charge of these kinds of things. So it's a bit of a refreshing change of pace, in my personal opinion, going from the days where the SEC just declared unilaterally that everything's a security and they're in charge of it, and they're just going to shove it into old rules. So in addition to that, we're also getting this stuff. The bill would also create federal rules for crypto exchanges, brokers, and custodians, including asset segregation and market surveillance standards. What that pretty much is saying is that it's defining roles specifically for what are digital commodities and who are the people that are responsible for doing what part of the process. Additionally, that asset segregation stuff, that's talking about your funds that are in central exchanges and whatnot, saying that you can't all just throw it in the locker and then just have a little sticky note that says, yes, Bob has 12 Bitcoin. Nope, you actually got to segregate this stuff and have proper custodial standards for it. As far as market surveillance standards, this is pretty much just like anti-money laundering, anti-fraud, anti-manipulation stuff. It's pretty stock, so nothing too crazy there. And then lastly, the legislation aims to replace the current enforcement-driven approach with clear statutory rules. That shift would give institutions and crypto firms a predictable compliance framework for operating in the US. Yep, pretty much right there. What this bill does is this is part 2 of what was started back in 2025 during Crypto Week in May. The Genius Act was pretty much the stablecoin bill that was passed previously. That one has done some good things to help define stablecoins and stablecoin usage so that people can start building products with it. We've actually seen a big rise in stablecoin backed credit cards and credit card like products that people are actually using. In fact, the segment has actually grown pretty much like 400% in 2025 alone, and we expect that to keep continuing. But this is actually even more clear. I mean, the great irony is it's the Clarity Act, so we finally have a bill that the name matches what it does for once. What this is going to do potentially is actually define the standards for who does what goes where, and what exactly are we even talking about in the first place. What is a crypto commodity? Was it a crypto security? Who is actually in charge of overseeing it? This kind of stuff is going to help create a more stable framework and environment for the entire crypto industry landscape so that people are more willing and eager to build. Because as it stands right now, the people that have really been bootstrapping all of the crypto up until this point are people that are willing to accept big risks when it comes to, is the SEC going to sue me randomly or not? So with this, it's going to actually give some definitions and provide some breathing room for people to understand that, yes, what you are doing is in fact like legal, not from like the sense of like doing good or bad morality wise, but more from like, yes, there are specific carve outs for you guys. This is where you go. You are not some weird redheaded stepchild of other stuff. This is your lane. And if you're in your lane, you're good. So as far as that goes, that encourages business, investment, and risk taking from people trying to actually take a foray into this place and build something new and good. With that being said, though, it's not all rainbows and unicorns when it comes to the process. So coming to us from Coin Bureau, Bernstein says the chance to pass U.S. crypto market structure bill is here and now. But a standoff over stablecoin rewards could derail it as banks push back against yield-like returns. Not just banks, but also crypto platforms. Come to us from Cointelegraph. Latest, Coinbase threatens to withdraw support of the Clarity Act if it restricts stablecoin rewards beyond disclosure requirements per Bloomberg. So what's going on in this one is that, well, as the Senate has been doing their markups or proposed changes to the bill, one of the things that they've been looking at is how stablecoin rewards are treated. The way it kind of works right now with Coinbase, Gemini, Kraken, all the other ones is that if you hold certain tokens on the platform, they're actually willing to give you a little bit of yield on them. This process and mechanism is what is under scrutiny. So very similar to how banks do this for yield-bearing accounts, they want to do it for the central exchanges if you're holding stable coins. Well, the banks aren't too thrilled about that because they're encroaching on their space, and Coinbase and all the other central exchanges are saying, hey, this is a massive driver for people using this platform and having stablecoins on here, which is a level of stability that helps these central exchanges operate the way that they do. So without specific protections for that, it means that that little cash cow that they have going might be at risk. So that being said, until we get more information on this one, it's kind of unclear where the chips are going to lie. But at the same time, this has been in the works for, about 7 to 8 months at this point. So I'm pretty sure the people that are going to be voting on the matter are well established and actually have pretty good positions for what they're going to be doing. But you never know. There might be some sway here and there, or some classic wheeling and dealing in DC to get the votes that you need to get this through. Again, I guess final point for the process, it is still in committee. It's going to go for markup and vote in committee. Once it passes committee, it will then be eligible to be voted on the Senate floor by all of the senators. And then at that point, if it is signed then, and you need the 60 votes to get past the filibuster requirement, then it will go to the desk of the president, where good old Donald J. Trump will have the ability to sign or not sign it or veto it. There are your 3 options: sign, veto, pocket veto, kind of. So that's what's going on there. As far as some other commentary on it, we have everyone's favorite Charles Hodgkinson. He's coming in with a bit of a pessimistic take on this one. Let's see what he has to say.
Fine. But here's the reality of the situation. I don't think the Clarity Act is going to pass in this quarter. And because it's an election year, we only have one left window. And if the Democrats retake the House, we will not have another opportunity till 2029. If it doesn't pass this quarter, I think Sachs should resign. He's utterly failed us as an industry. We look at three lenses: the price going up, no; adoption going up, no. Do we have clarity and certainty, and do we have a strong foundation to build on? No. So if you're the czar and you're in charge of this whole thing, I got to judge you by your track record. Most cryptos are down 40 to 50% since Trump took office. But here's the reality.
Well, there you go. So Charles Hodgkinson is saying, I don't think the Clarity Act will pass this quarter. If it doesn't pass this quarter, David Sachs should resign because he failed us as an industry. For reference here, David Sachs is the current crypto czar. And what our friend Charles Hodgkinson here is really talking about is a few different things. Coming to an article from Cointelegraph, really criticizing him from the fact that we've only gotten one piece of legislation through, and this could potentially be the second. But as he talks about, if it doesn't happen early, well, midterms are going to start creeping up on you. And the closer you get to midterms, more people start campaigning, stop actually like voting on stuff in Congress, and wait for the dust to settle and see where things really shake out before the new Congress takes his post in January of 2027. I know it sounds crazy to say we just started the year 2026, but we're already kind of beholden until the beginning of 2027 to get more stuff through. It's not quite there yet, but it is a bit of a possibility. So again, saying if it doesn't pass this quarter, odds are if the Democrats regain control of the House of Representatives in November, then the current window to pass the bill could be lost entirely as other priorities come up. And when you have different control of the houses and the presidency by different parties, you kind of get a lot more standstill in the government. So with that being said, it was supposed to be voted on Thursday, but yet again, kicked down the road. And yeah, he's coming after David Sachs on this one as our crypto czar, because pretty much what we've gotten are the Genius Act, the one piece of legislation, the stablecoin bill, Paul Atkins at the head of the SEC, and then the crypto czar appointed by Trump has been doing a lot of roundtables and talking with industry professionals, but not that many things have actually materialized out of it. Because of that, he says that, well, if he doesn't pass this, then he's kind of calling it a failure. So a little bit of a bear take there from that guy. But at the same time, though, the reason that we're talking about some of these stories is because it's the overall tapestry and it leads to a larger point. So we got a few more folks to get through. These, keep in mind, these are all very high-ranking officials inside of the government that are actually in charge of doing regulation enforcement. Granted, they don't pass the laws, but they are in charge of the agencies which do appoint these laws. So here we go. Coming to us here, we have the Treasury Secretary, Scott Bessent. What does he have for us?
We will take a close look at regulatory impediments to blockchain, stablecoins, and new payment systems. And we will consider reforms to unleash the awesome power of the American capital markets. Americans deserve a financial services industry that works for all Americans, including and especially Main Street.
Okay, Scott Bessent saying that the financial industry needs to work for more people. That makes sense. All right. We also have Paul Atkins, not a video clip this time, but he's saying that 2026, there will be a massive easing of crypto rules by the SEC. So again, coming to it. So we have now Treasury Secretary saying that financial services, banking industry, which are now being affected by crypto, by the way, need to ease up and help out more people. We have the SEC saying that crypto rules are going to get easier. And we actually have definition of crypto rules potentially getting passed by, well, the Clarity Act, if it does pass. All this does culminate up to a point that is actually made by Mr. Wonderful, of all people. Keep in mind that this was from a conference back in March, I want to say, but this clip has been popping up to help explain why people care about what's going on. So, Mr. Wonderful, here you go.
I love the idea of innovation. The money center banks have been sitting on their hands for years, crapping on the crypto industry, but it's not about Bitcoin. Nothing to do with Bitcoin. It's digital payment systems. That's the potential. That's the amazing opportunity we have here. Now, the reason that will be important and why we'll get price appreciation on Bitcoin is the minute that happens, it will signal the move to the next act, the Market Infrastructure Act. And why that matters to everybody in this room is we will finally determine, is Bitcoin a commodity or a security? And when that is determined and regulated, Katie bar the doors, $1 trillion will come and index that asset. Let's all hope that happens while we're all alive here. Anyways, thank you.
There you go. And by the way, shout out to Moonfeld Rational Optics. I see a big guy. He's correcting me. It's not Czar, it's Kaiser. Yes. If you want to put some of the King's English on it. Yes, sir. I'm apologies. I only speak the lowbrow American over here. But also shout out to our boy Centurion 54X. He says, "What's up, guys? I see all you guys out there. Thank you for tuning in. I hope I'm putting on a great show. If you have any comments, questions, concerns, or funny quips, throw them in the chat. I'll be sure to highlight them as we keep rolling through the plethora of clips that we have here tonight." Yeah. In a world of money changing hands, he be the middleman. Agreed. It's kind of the idea that when the gold rush is going on, don't dig for gold, sell pickaxes. Hey, some good advice to live by there. All right. So, Mr. Wonderful, what are we talking about here? Well, he pretty much called out the Clarity Act on that one, saying that you need the market structure bill. Once the market structure bill is in place and we actually have definitions and know what's going on, that's when you see the floodgates open. And tell you what, I happen to think that he's pretty spot on in this one. The only correction I do have for him is that we do have an official definition of Bitcoin is not a security from the previous SEC under Gary Gensler's leadership. So that one is still defined, but the rest of them for crypto. What is a commodity? What is a security? What are all collectibles like NFT, meme coins, all that kind of stuff? That's yet to be determined. Once we get that, I happen to agree with him. I think that we're getting ready to see the rollout of a lot of money coming in from TradFi. And that leads me into pretty much what we're going to be talking about for a good chunk of the rest of the show here, which is that I have been getting bombarded with a plethora of clips of high-level individuals from traditional finance coming out, giving all their bull takes, all their bull predictions about this is going to be a massive year. Why isn't Bitcoin already at 200K? All that kind of stuff. Is the timing suspicious? I would say it's a hell of a coincidence, at least, that you're getting the market structure bill that was supposed to be voted on this week. And the week leading up to that is when we start seeing these people coming out of the woodworks talking all these great things about this potential thing that they would love to build on. So that's pretty much where we're going from here. Up first, coming to us from Altcoin Daily. This is an excellent little video clip, by the way. Let's see what we have to say from Fidelity Investments. You might recognize that name.
In 2012, traditionally what we have seen is Bitcoin has had this 4-year cycle. Mm-hmm. And that 4-year cycle has been highly correlated to Bitcoin's halving events. So in 2016, if you go 10 years ago, in 2016, you had a halving. 17 months after, you had peak price of Bitcoin in December 2017 when it hit around 20,000. Similarly, in 2020, you had another halving event. And then 18 months after, in 2021, you had another peak price of Bitcoin.
Right.
So some might say that you had the last halving in April 2024, so maybe we are past that peak price. But again, on the other side, you're also seeing a lot of arguments around how we might have entered into a super cycle as opposed to what we have seen in the past of 4 years.
Yeah.
And what a super cycle really means is you might have more prolonged highs, longer highs, and shallower dips. And I want to give a shout out to Fidelity Digital Assets research team, which talks about the super cycle mechanism. And we might see something similar that we have seen in the commodities market in the 2000s. And that's dictated by 3 big factors. One is you're seeing this steady buy-in by institutions focused on ETPs. In the domestic market, especially in the US, you're seeing pro-crypto policies.
By the way, real quick, when he says ETPs, what he's referring to is exchange traded products. That is ETFs, whether it be spot, options, futures, it all falls into that category. Back to the video.
And then the third, which I'm really excited to talk about, is we're also seeing how the crypto market as a whole is maturing and deviating from the S&P 500 and precious metals.
So that's great.
There you go. Deviating from the S&P and precious metals. That has been one of the narratives that people have been talking about for a hot minute, which is that is crypto actually doing its own thing or is it just following the market? Well, if you've been paying attention long enough to know, you know that it does both, but it has different times for each one. There are periods of time where the tops do become real blow-off tops. They do somewhat correlate with the S&P 500, but the scale and the amount that they go up in proportion to the S&P 500 is much bigger than that. Additionally, the bear markets, these are very similar effects where you have some events come along and really just shake the charts. For instance, what pretty much created the bottom this last time around was a bunch of the exchanges failing, and notably FTX failing, and good old Sam Bankman-Fried and the weird stuff going on down to the Cayman Islands comes out, and that's what causes the market. Did it affect the S&P 500? No, not nearly as much, or even at all. Did it affect the crypto markets? Yeah, you believe it. That was one of the things that really made the bottom. You can point to it on the chart to the day. So, with that being said, yes, Mr. Fidelity Man is spouting the super cycle idea. One of the reasons that I think that this guy actually might have some weight when it comes to talking about super cycles is the fact that the amount of money required to enter the markets to cause that sort of event, well, Fidelity and some of the other players akin to them are the people of that size now. Remember, we're looking at a $3 trillion market right now. We did get all the way up to about $4 trillion back in October. So that being said, we have seen some of this kind of action happen before. If you recall back to 2021, when we had the double top for that cycle, one of the big things that caused the double top was, well, China kind of turned off the faucet, and that really hurt the market from the mining standpoint. So not a whole lot of Bitcoin coming in there. And then we had the conclusion, which was our second top. This could be something similar when it comes to the idea of a super cycle. Again, I'm not out here spouting that it's 100% fact. Nothing you see on here is financial advice, by the way. But if you do want to affect the market to the level that you will actually change the 4-year cycle as it stands right now, this is the level of capital required. $1 trillion, pretty much minimum, honestly, because that's what's going to take to get the market going and actually get people not just to realize gains based on people putting new money in, but actually get green candles that get more green candles and build that hype. Alrighty, who we got next? Let's see. All right, coming to us from Coin Bureau, Wells Fargo.
Or are pretty. Volatilities are really low. So just think about implied volatility as the price of insurance. The VIX is super low. Foreign exchange volatility is really low, down to less than 10th percentile in most currencies. Interest rate volatility was kind of a laggard. It's crashed down over the last few months. What that tells me is investors are saying we're pretty comfortable. Are they overconfident? Maybe, but probably not quite yet. But still, I think it's telling us that people are pretty sanguine about taking risk right now. They're taking more of it as far as I can tell, Karen.
All right, there you go. Risk and volatility are down, potentially causing investor confidence to rise. And, well, guess what? Crypto's in there. So coming to us from Wells Fargo, low volatility across stocks, futures markets, and rates suggest investors are comfortable buying risk assets like crypto. That extra little part there was not quite in the clip, but you can definitely make the inference there. Again, last I checked, according to the 4-year cycle gang, this is the bear market. There should be zero confidence in anything happening other than price going down. So to hear, I don't know, the big guys in the market that are trying to get in saying that, yeah, it's actually a decent time to buy up because things are settling out. We're getting ready for stability, which could cause upwards momentum. Well, there you go. Alrighty. The Giga Bullish take. You know him, you love him, or you hate him. Either way, ladies and gentlemen, it's Tom Lee. Let's see what he has to say.
January. Now, I think crypto prices are beginning to actually recover. That's why I think Bitcoin can double from here by the end of January. Now, many people don't expect it because of the 4-year cycle. And that's going to be the big question. If Bitcoin breaks 125 in January, there is no 4-year cycle. I think crypto prices.
All right. Well, he's really swinging for the fences on this one. Pretty much saying, if Bitcoin prices can double in January, or at least hit 125,000, he's pretty much saying 4-year cycle is dead. Keep in mind, 126,000 is technically the number we're looking for the previous all-time high. But, I mean, rounding error, it's easy psychological talking point. That's what, $1/800,000. So, understandable. We'll let it slide. But, yeah, getting back above 126K before the end of January, that would look like a hell of a green candle. If you look on the screen where my cursor is currently pointed, that's the target. Here's the higher target. How do you feel about that one? If that's the case, that would be the biggest set of green candles I think I've ever seen on the charts. But again, it's Tom Lee. Does he have a position in this game? Yes, he does. He's heavily invested in Ethereum and believes that that is the next one to go. And that's why he's been buying it up. But you know what? Tell you what, we got one more Tom Lee for you. So let's see what he says.
Tariff disruption. Well, I do think there's a couple of sort of macro tailwinds that should help stocks. One is I do think that the economic clarity is better because the tariff disruption is more in the rearview mirror, even though we could get that overturned. But in general, tariffs aren't going up. They could be flat or down. And the second is the Fed is really turning into a tailwind because the Fed is leaning dovish. They're focused on the job market. QT is over. We have a new Fed coming. And so all of these are in some ways, I think, and they're not fighting inflation anymore, a put for the equity market.
What happens if SCOTUS strikes down the tariffs? Is that a positive or negative for the market?
It's a source of confusion. It's going to depend on how they word their decision because, you know, there may be refunds involved and claims. And of course, we know the White House will seek to re-implement the tariffs. But I think on balance, it means that we put a ceiling on the tariffs, that they aren't going to be higher, but there's a chance they're lower. That's a net positive.
There you go. So theoretically, tariffs are not going to be an issue anymore, or if they're still an issue, they're much less of an issue. Okay, why does that matter? Well, if you remember again, we're going to point back to the charts. This right here, this entire dip, that was caused during the tariff debacle back in early 2025, and a little bit actually during our great liquidation event that tacked on to the end there when we were talking to China about renegotiating the stuff that got pushed off from 90 days to actually figuring out what to do with that. So yes, he is correct with saying that, well, there is something coming out on that. Coming to us from Ted Pillows on X. Big week ahead for crypto holders. January 12th, U.S. market open after the Trump-Powell situation. More on that later. CPI and core CPI data coming out the 13th. Very cool. 14th, Supreme Court ruling on Trump's tariffs, PPI, and core PPI release. This is what Tom Lee is referring to in this one. The Supreme Court of the United States is currently looking at tariffs and whether or not the president can implement them in the way that he has done so. Personally, I happen to think that there's a high likelihood that the president is going to be upheld. The reason I say that is that the president has a large degree of power when it comes to foreign negotiations. The way that the system is set up is that Congress pretty much takes care of stuff at the home front, and then the president is the sole leader and point of negotiation for all things international diplomacy-wise. And yes, tariffs are one of those because, well, you're dealing with the other nations. The issue where it gets murky, though, is that the power of the purse or the power to tax comes directly from Congress. So you can kind of see where you can try to split the baby on this one. And, well, hopefully tomorrow or Wednesday, we should be getting an official ruling on that. Keep in mind, there's going to be two things that come out of that. There's going to be the majority opinion and there's going to be the dissenting opinion. The way that those are written will have the implications, as Tom Lee said, which is how it's actually treated. Just because they say thumbs up, thumbs down on it doesn't mean that's all to the story. This is where you get a lot of court case precedent coming in and how things are to be handled moving forward. But yep, again, sad to say, Senate voting on the Clarity Act, yeah, it's got pushed back 2 more weeks. The classic 2 more weeks. Okay, that's Tom Lee. Who else we got? All right, from the Bitcoin historian, former PayPal president telling Bloomberg it's only a matter of time before Bitcoin tops 1 million. Let's see if he's right. All right, David Marcus, what do you got for us?
I still feel Bitcoin is severely undervalued, especially if you compare it to gold. Like if Bitcoin was worth as much as gold, it would be $1.3 million a Bitcoin. And I think it's just a matter of time. And I also feel like the utility phase of Bitcoin as a neutral settlement network and asset for all of the payments in the world hasn't been priced in at all. So I think it's just still so incredibly early for the asset. And I still feel
All right, there you go. David Marcus, you're still early. Hey, good news for you guys out there. But yet again, I'm just going to keep pointing them to him. We got another guy, former PayPal president, saying that, yeah, this is going to be $1 million asset and doesn't see why it's not already. Very well. We're going to keep the gravy train rolling. It's the clip hour, clip show, if you will. So who do we have here? BlackRock's Rick Ryder for Fed chair. This was one of the possible people for the Fed chair, but as we'll point out later, didn't quite make the cut. So let's see what the guy has to say.
Going through the what do you think the ideal portfolio is supposed to look like today? We're surrounded by investors. We're surrounded quite literally by financial advisors who are thinking about that retail investors who are watching? I mean, what does it look like today?
Very different than the past. So maybe I'll start with the equity market. I mean, the first thing I would say, we're going through the most extraordinary technology dynamic I've ever seen before. I would stay long equities. By the way, you can buy volatility very cheaply to manage your exposure. I'd stay long equities oriented to where growth in technology is. In fixed income, income is amazing. You're still clipping 6%. Would I stay 5 years in on the curve? I'd still clip that coupon. We're extending a little bit out. And then quite frankly, I mean, there's some interesting things to do in privates, bespoke markets. And I think hard assets have to enter the equation today. Gold, Bitcoin, things that give you a little bit of ballast in the portfolio against potential for currency depreciation.
When you talk about Bitcoin should be part of the portfolio, what kind of percentage are you thinking about? Is it a 5%, which generally seems to be what people are talking about, more or less?
It seems high to me. So I run our global allocation fund. You know, we're running long equities. You know, we're heavy income. You know, we're running, you know, in the 3 to 5% region on gold. Gold strikes me today as a better currency hedge. Bitcoin tends to trade with vol, tends to trade with the NASDAQ. So we're running considerably lower than that in crypto. I just think it's going to go up, and I think it's a good expression. But 5 seems high to me, but it depends where you are in your life and how much risk you want to take.
Well, we'll see you on the stage, the big stage. I said as the headline speaker, the keynote.
Well, there you go. What is the perfect portfolio? Saying that crypto and Bitcoin in particular at 3 to 5%, is that a lot from the overall portfolio? No. Keep in mind, is he talking to crypto bros out there? Absolutely not. He's talking to average mom and pop Joe and Jolene out there. But at the same time, though, again, more people from this side of the house are actually talking about crypto, and he's talking about it from the hedge against inflation. It's the same vein as gold. It is the store of security. It is digital gold. That's pretty much the best analogy you can make one-to-one on this one. So, Mr. Rick Ryder, thank you for the endorsement. And as you said, he thinks it's going to go up. So only time will tell. We'll have to see if he's right. Another one, Pantera Capital. Dan Moorhead. Let's see what he has to say.
Few more years. When you look at the price of Bitcoin right now, since you started there, what do you think it ultimately lands at? And what do you think the window is right now for it?
Oh, you know, I've been saying this for a long time. It's roughly doubled every year for 12 years that we've been doing this. So I think it keeps doing that for at least a few more years. It's still a very low single-digit percentage of global wealth. So I think it could go up to 750,000 in the next 4 or 5 years.
That's a hell of a prediction. $750,000 Bitcoin in 5 years max from this guy. Again, I'm going to put this into the Tom Lee category where we're taking it with a massive grain of salt, considering that these people stand to gain massively from this kind of thing. But also, hey, at the same time, if you got in early before these guys did, you're going to win even more than they did. But at the same time, though, one of the interesting things he talks about in that clip is that global wealth, crypto, is only single-digit percentages of that. That meaning that for however much people talk about crypto millionaires and billionaires just making money crazy and just becoming some of the new richest people, well, they're still not even that big of a player in the game. Keep in mind, global stage, we're dealing with everything from Elon Musk to the Saudis, who have an unknowable amount of oil worth just an ungodly or even like unimaginable amount of money. But at the same time, though, look, again, another big guy, Pantera Capital, talking about where he thinks it's going. And, well, that takes me to this. Coming to us from Cointelegraph, crypto enters round 2 of institutional adoption led by Morgan Stanley Binance. Binance research said crypto markets are entering a new phase as institutional allocation and strategic positioning begin to outweigh retail-driven momentum. Despite a weak finish to 2025 for digital asset markets, the sector appears to be undergoing a structural shift, moving away from retail-led momentum trading toward one increasingly shaped by institutional capital flows and long-term strategic positioning. That was a key takeaway from a recent macro weekly report by Binance Research, which pointed to a structural pivot underway across digital asset markets. The report highlighted potential drivers including sovereign accumulation in emerging markets and legislative efforts in the U.S. to establish a strategic digital asset reserve. Following the approval of the US spot Bitcoin ETF in early 2024, the market has now entered what Binance Research described as a second round of institutional adoption, characterized by deeper engagement from traditional financial institutions. As evidence of this shift, Binance cited recent S1 registrations by Morgan Stanley for Bitcoin and Solana ETFs. The move suggests that leading Wall Street companies are beginning to act not only as distribution channels, but also as product originators in the digital asset markets. Excellent stuff. Macro forces. Rotation could support digital asset markets in 2026. Oh, that's this year. Look at that. Binance Research also pointed to the broader macro backdrop as a supportive factor, noting that diversification away from concentrated exposure to large cap technology. Apologies, I'm getting some feedback real quick. Thank you, Scott Besant. Wasn't ready for you then. All right, my bad. Diversification away from concentrated exposure to large cap technology stocks could create tailwinds for digital assets to play a larger role in diversified investment portfolios. The rationale is partly rooted in last year's elevated valuations among the so-called Magnificent Seven technology stocks, where enthusiasm around artificial intelligence, AI, drove a sharp concentration of returns. In 2025, the 10 largest companies in the S&P 500 accounted for 53% of the index's total gains, underscoring growing concerns about crowding risk in traditional equity plays. This level of concentration could encourage investors to seek diversification beyond mega cap equities, with digital assets potentially benefiting from incremental accumulation. Alrighty, so what are we seeing here? What Cointelegraph is pretty much laying out is there are two cases for seeing 2026 even being a big crypto year. Number one, having more pretty much stability and just engagement from traditional finance once we get legislation. The first real round from traditional finance came through the ETFs. Since then, haven't gotten a lot of legislation, just the one bill mid-2025. And yes, pointing back to the Clarity Act, which did get delayed 2 more weeks, but they're saying that that could actually start the second round of institutional adoption. And again, pointing back to all the guys that are screaming from the high heavens that it could be the super cycle. Bitcoin's going to a 200 doubling within the end of the month, according to Tom Lee, or our other friend there saying $750,000 Bitcoin within 5 years. And our other friend saying, yeah, could be $1 million asset. What I'm pointing out here is that I think the timing is very suspect, or a hell of a coincidence at that, which is that this is one of the pieces that we've been talking about for a while, which is X is just messing with me today. Sorry, it keeps playing videos in my ears. I'm trying to do this. Anyways, back to the point. So we're seeing legislation potentially about to come out. Same time, we're seeing everybody get on board with the narrative. It seems like people might be gearing up to take positions, as exactly like Cointelegraph is talking about in the article right there. So with that being said, it's definitely something to keep an eye on. And additionally, on top of that, other indicators that show that this might be happening at other in tune with other things going on. Well, let's pull up one of Russell has 2 L's. Thank you. Russell 2000. This is our small to micro cap stock ticker pretty much, or an aggregate for it. Let's throw it on the weekly and see what we got going on. Well, I got to say, that's a pretty good sized green candle right there, as we just took all-time highs and happening in 1 week. Even on the weekly, not quite in that overbought territory on RSI, but creeping up to it more and more. What this is showing is that the overall business cycle is starting to get into the point where it's going to be doing pretty well and starting to get a little bit hot and heating up once we have a good run into the all-time highs with Russell 2000s. Additionally, let's look at, I don't know, the Bitcoin competitor. That's called gold. Well, gold still continues to keep going up and up. We saw $46,000 or $4,600 gold per ounce this last week. in conjunction with that, guess what? Silver doing the same thing as well, even more aggressively when it comes to the overall shape of it. Looking at $83 silver now, and well, might as well. Let's see copper. Copper futures. Yep, copper going up as well. So indicators from hedging against inflation to technological stuff in silver and just hardware and infrastructure overall in copper. It's lining up with the Russell 2000, and it's lining up at a time frame where it appears that people might be getting ready to make big moves when it comes to investment. At the same time, though, is the unemployment numbers still concerning? I would argue yes. Are we seeing rates dropping down to the low threes? Not yet. And as it stands right now, the CME Groups has, I believe, a 80% chance of no cut in January. So keep in mind, the next Federal Reserve meeting is at the end of January. And as it stands right now, the market is predicting no cut this time around. However, the overall predictions for the end of year interest rate is at 3% or even slightly below it. And that is a heavy favorite as it stands right now. Keep in mind, the interest rate stuff, you got to take it with a massive grain of salt, especially when you're far out from your projection date, because these things swing heavily based on the data that comes into the Federal Reserve. But all that to say is it lines up with the window of maybe getting into quantitative easing to help support the markets and help support business growth to curb unemployment. At the same time, though, I happen to think that the AI question is still unanswered about whether or not we truly have deviated from having unemployment and the S&P 500 correlated, because we're now seeing a decorrelation between those two charts, which happens to start in 2023, which is when ChatGPT was released to the public. Just food for thought to keep in mind there. Alrighty. By the way, if you guys have any comments or concerns or questions about traditional finance and the 4-year cycle stuff, please, I'm happy to answer it. I think we've beaten it up a good bit on the channel. And as we are right now, the question remains, 4-year cycle dead or alive? The case for being dead is kind of what Tom Lee talked about there, which is that if we can recover the Bitcoin price to all-time highs pretty much anytime between now and what I would argue is the end of the first half of the year, that would be a very big case to say that the 4-year cycle, at least for this one, is not working out the way that it thought. If we do not see that happen and we see continuous downwards pressure or even kind of just chopping sideways through the majority of 2026, it's an argument that the 4-year cycle is still alive, but it just means that the gains have greatly diminished and the drops will also have greatly diminished as well. Keep in mind, we saw about a 36% correction from all-time highs to the most recent lows at about $79,000. So is that a full-on bear market? No. But at the same time, we can only make the determination on that question once we get more data and we actually get a true confirmation about which way it's going. Till then, though, I completely expect to see more people coming out from traditional finance saying that, oh, this thing's great. We're going to keep buying it up. We're going to keep seeing the purchases, and we're going to keep seeing the $1 million predictions. By the way, speaking of predictions and corrections, Moonpill says, correction, it's all over. It's only going to $750,000. Hey, well, when we had Richard Hart coming out saying Bitcoin 241,000 this cycle, well, that seemed pie in the sky. I don't know if 750,000 is as our low projection for possibly even the next cycle. That being said, we do have some interesting news of note when it comes to the Federal Reserve. We finally have an answer for you, or for Tracker at least. Breaking, President Trump formally announces Kevin Hassett as the Fed chair, bullish for crypto. Yep, we're getting towards the end of Jerome Powell's run here at the Federal Reserve. And I gotta say, I don't think it's a great time to be in the Federal Reserve right now because there's some things happening over there. One of them is some important people are starting to call him out. So, Treasury Secretary Scott Bessent, let's see what he has to say.
The Fed began what we call QE, or large-scale asset purchases. They went in the market, started buying long bonds, and the theory of the case there is you create liquidity, you take safe assets out of the market, long duration safe assets, and then the people who receive that money would buy more risky assets. Ben Bernanke famously said, when he was asked what's the purpose of QE, he told everyone, go buy equities. Well, not everyone could buy equities. So we ended up with like this two-tier economy where either you were an asset holder or you weren't. And the Fed probably definitely kept QE going for too long. And I called the Fed the engine of inequality. And someone said to me, well, do you believe that the Fed is responsible for economic equality in the system? And I said, absolutely not. That is not one of their mandates, but they shouldn't be exacerbating it.
Yeah, that's a pretty harsh criticism of the Fed, actually. Pretty much saying that they are kind of responsible for a lot of the inequality that's going on in the markets, kind of the rich get richer, the poor get poorer kind of thing. The K-shaped economy, if you will. And yes, we have seen that effect be exacerbated in the last decade or two, but also pretty much since the Federal Reserve's inception back in the 1910s. So, look, personally, not big fan of the Federal Reserve and what it's done. I also understand it has had its use cases and it has had a reason to exist in the first place. But at the same time, I happen to think at this point, it's in combination with a lot of other factors. But I'll tell you this much. If I was at the Federal Reserve right now, or if I was Jerome Powell, I would not be too happy about my outlooks. With that being said, where is my article? Here we go. Nope, that's not it. Here we go. Jerome Powell has come under some hot water lately. There is an official investigation into him and the DOJ, specifically centered around a renovation project that they were doing to the Federal Reserve that has gone way over budget and way past schedule. And, well, the investigation is actually getting towards releasing some potential grand jury indictments for people in that area. But it's not every day that you actually get something like this, which is Jerome Powell literally recorded a 2-minute message released from the Federal Reserve X account and pretty much came out there and said, look, this is something I've been reporting on. They're coming after me for my testimony in front of Congress a while back. And it appears just to be politically motivated because he happens to believe that Donald Trump is taking this action with the DOJ because Jerome Powell's not done what Trump wanted with the interest rates. And he kind of gives you the end statement there, which is that they're going to stick to the Federal Reserve's dual mandate of stable prices and full employment. And hear me out. It's a pretty typical Jerome Powell speech, but from all the times that we've seen Jerome Powell get asked these questions during the press briefings and he just shuts them down immediately, here's the answer that those people have been waiting for. And it's a pretty full-throated rebuke of what's going on. But at the same time, guess what? He's not in charge of the DOJ. He's in charge of what's going on with the Federal Reserve. So Federal Reserve Chair Jerome Powell blasted the Trump administration over a new criminal investigation, arguing it's the latest attempt to destroy the central bank's independence on interest rates. Powell said on Sunday that the investigation is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public rather than following the preferences of the president. The U.S. Attorney for Washington, D.C. opened a criminal investigation into Powell on Friday over the agency's renovation of its headquarters and whether Powell lied to Congress about the size of the project. So, yeah, what they're going for is pretty much just contempt of Congress or just lying under oath, effectively. The track record shows that not many people have ever been pursued for this, nor convicted if tried. So, look, I don't think it's really going to stick. I happen to think that it's shaken the waters pretty good. And that's one of the two big stories that's been coming out of this one. The two stories really are, is the Federal Reserve going to be independent after this kind of action? And, oh gosh, I even forgot my second one. Oh, and how is this going to affect the markets pretty much? Because if you're coming after the person setting interest rates play a large part on the market and the overall economic ecosystem going on. Something like this could potentially shake that stuff up. But until we get more information, you got to let cooler heads prevail. You got to wait for all the details to come in. This is just the announcement of it. So stay tuned for what's going to be following on this one. It could be big. It could be nothing, depending on who you are, how you feel, that kind of stuff pretty much. Anyways, final story I wanted to close out with you guys here tonight. We have a little bit of an update or follow-up from last week. So talking about Venezuela and the capture of the former president, Maduro, and the extradition back to the United States through a very cool Delta Force operation. But people have been asking the question, hey, we gonna get any of that Bitcoin that they have down there? Because they have quite the reserve going on. So SEC chair remains to be seen whether the U.S. will seize Venezuela's reported Bitcoin. Several blockchain analysts said they were unable to verify whether the Latin American nation held $60 billion in Bitcoin, but Paul Atkins, chair of the SEC, didn't rule out the possibility of authorities seizing Venezuela's reported Bitcoin holdings after U.S. forces unseated and captured the country's president. In a Monday interview with Fox Business' Stuart Varney, Atkins responded to reports claiming that Venezuela holds up to $60 billion worth, though several analysts said they were unable to verify these claims. The SEC chair said it, quote, remains to be seen what action, if any, the U.S. would take if it had the opportunity to seize the reported 600,000 Bitcoin. So, tell you what, I got the source for you. Let's hear from the man himself.
Bitcoin off them. Venezuela has a Bitcoin stash worth about $60 billion. The chair of the SEC, Paul Atkins, joins me now. Mr. Chairman, what's going to happen to those Bitcoins?
Oh, well, that remains to be seen. I think, this whole operation has been amazing. The president and Secretary Rubio, and then the brave service people in our armed forces have done a really spectacular job to try to help bring peace and liberty and prosperity to the people of Venezuela, and then obviously safety to the American people.
Well, are we trying to take those Bitcoin off them?
Well, I mean, that I leave that to others in the administration to deal with. I'm not involved in that. I'm focused really, this week is an important week because the Senate's going to be taking up a bill. It's a bipartisan bill, but which will bring clarity and certainty to the crypto world, and as to the division of responsibility between the SEC and the Commodity Futures Trading Commission. So important week, and it'll set the tone for the rest of the year, I think.
Can you tell me about stablecoin? I understand that it has a quarter.
Thankfully, they cut it off there. I don't know where the next question was going. Can you tell me about stablecoin? Which one? What about it? Anyways, hear me out. Bit of a less serious news topic, just a fun one to throw in as a tie into last week. But I guess people are asking the questions because, look, that was a big change. A lot of people are happy. A lot of people are upset. It's odd that a lot of the happy people happen to be people of Venezuela, and the unhappy people are not Venezuelans, but that's yet to remain to be seen what's going on with that. Outside of that, though, a couple things to talk about before we get out of here. Found this that was floating around. Just in, crypto viewership on YouTube drops to lowest level since January of 2021. Retail losing attention or interest in altcoins. Hey, shout out to you guys. You're still watching. Thank you very much, by the way. But this is one of the things that people are kind of pointing for the case of a bear market or the 4-year cycle actually coming to its natural conclusion. And we already had the all-time high, pretty much showing that, well, across a bunch of the different platforms and also accounts, viewership is down, even though Bitcoin price is up and looks like it started to falter. Is this a hard data point? No, not really. For those of you guys that know out there, I'm looking at you, Moon Gang. You kind of know that there's a bit of an indicator for Charlie and Miguel talking about when they think the market's heating up based on the amount of viewers or the ratio of viewers to subscriber count. At the same time, though, love those guys. Shout out to my crypto rich dads over there. But with that being said, look, we went through a bunch of bull posting from the big TradFi guys. Here's a little bit of bear posting from the retail investment side of the house. So again, time will only tell which way we go. But yeah. Alrighty. One more for you. Market update. Let's see what we got going on with the Bitcoin ETF. Well, not much. We have seen a large amount of outflows and a relatively proportional amount of inflows at the same time. However, I will say the outflows do have it by a bit of an edge there. At the same time, though, is this anything crazy in a certain direction? I would actually argue no. And this, I'm looking back to pretty much like early December. That's the time frame that I'm looking at on this one. So with that being said, let's flip over to the Bitcoin chart. So the time frame that we're looking at is pretty much early December. So that is starting right about here. In that time frame, we did go up to 94,000, drop down, and then came back up to 94,000 and are holding steady where we are right now. What this kind of tells me is that, look, were the ETFs outflowing? Yeah, a little bit. But at the same time, price held relatively stable and showed the same amount of interest as it did at the start of it when it was still largely outflows. So, in my personal opinion, I think that that happens to indicate that there is an interest in buying up Bitcoin. Maybe not through ETFs, but through other means, whether it's over-the-counter, retail trades, whatever that may be. Additionally, I think the charts are showing us something interesting here. So, the blue and teal lines, those are our moving averages, our 20 and our 50-day moving average. we've had an interesting inflection point, which is that the 20-day moving average is now back above the 50-day moving average. Keep in mind, though, we are still well below our 200-day moving average. That's our long term, the 200, our medium term, the 50, and our short term, the 20. Things like these usually indicate reversal patterns, whether you're going from up to down or down to up. In this case, it could be potential down to up. Additionally, if we look over at RSI, we see that we are building continuously higher lows, even though price doesn't seem to be moving up that much, but it does show that there is more relative support or relative strength, as RSI literally points out there, which could also be a bit of a bull indicator going on. With that being said, we are where we are. And sorry, I'm getting another input coming in. Thank you, X. You're really screwing up the stream today. Anyways, yes, what we're looking at here is potential reversal pattern going on with the markets. But like I was saying, we are where we are. We got to take these things one level at a time. As much as we want to say that we're all Tom Lee and we expect Bitcoin to just double in a matter of 21 days, let's be honest with ourselves. Stuff like that doesn't really happen, especially at where we are allegedly in a cycle or in a bull run. That being said, though, there is still a lot of hope out there when it comes to fundamentals for the near future of where it could possibly be going. Outside of that, the only other bear case I have for that is a potential end to a 60-day cycle, which could create a new cycle low, maybe a periodic dip or very short-term dip below the moving averages before a move towards the upside. That kind of stuff is what I'm looking for our 60-day cycles, which is kind of what Bitcoin tends to run on. There has been talk about whether or not Bitcoin is on an 80-day cycle now, but that theory is still relatively unproven. However, I will say it is an interesting theory. Currently looking into it with one of our friends, Mr. Angry Twinkie. He was the one that brought it to my attention, so shout out to you, big guy. But yes, things could be possibly evolving. If we do actually get a confirmation of 80-day cycles, that would also be another feather in the cap of pointing to that, well, maybe the 4-year cycle is turned into a 6-year cycle or something like that. Hey, look, I'm telling you how I see it, big guy. Yeah. Don't worry, though. At the end of the day, just remember it's all over. We're only going to $750,000. Yeah. All right. Final ramble time here for you. What have we learned today? Well, Congress never ceases to disappoint the ability to punt things down the road. So yes, Clarity Act. Thought we were voting on it this week. Looks like it's 2 more weeks. Is that a done deal? Doesn't appear so. One of the reasons that you could argue is that they pushed it down the road is that they didn't have the votes to pass it. And we are also seeing reports that certain industry leaders that would be throwing a lot of their weight behind this bill to support it are now wavering over those stablecoin yields and yield payments, pretty much, which are an attractor to their platforms. So got to keep those guys happy to keep them in the game. Form your own opinions on that one. I'm just kind of personally in the vein of I'm looking for general adoption and a better baseline. Whatever it takes to kind of get the stuff through, I am relatively in support for. Doesn't mean I'm going to like everything inside of it, but overall clarity for the ecosystem and people to start building and investing, I think is a very good thing and can help crypto run up into the future, which I'm very hopeful for. Outside of that, the other main talking point of tonight, we saw everybody and their mother coming out talking about how Bitcoin's going to whatever price target they want to talk about, or even saying that, yeah, Bitcoin should be a decent percentage of your portfolio. And even the tacit endorsement there that Bitcoin is pretty much analogous to gold in the way that they view it as a hedge against inflation or pretty much currency depreciation, if you will, because yes, the US dollar continues to be printed. Reports have been coming out that the Federal Reserve is ramping up printing, not from the full-on quantitative easing standpoint, but allegedly $100 billion have entered the markets in the last 30 days, which is a significant increase. On top of that, pay attention to the M2 money supply and global liquidity. Both of those things have been going up on a continued steady basis for almost 1.5 to 2 years at this point. Stuff like that indicates that, well, the money pool is expanding and, well, the asset pool really isn't expanding that much, aside from the Bitcoin mining, but that's inconsequential in comparison. When that kind of stuff happens, that is exactly what we have been looking for on this channel to show that, well, money's getting cheaper. As a result, assets are going to look comparatively more expensive when measured in those US dollar terms. In addition to that, the overall business cycle appears to be heating up when we looked at the Russell 200 or Russell 2000, gold prices, silver prices, copper prices. So yeah, we could be looking at some trend reversals going on. And well, the other big story for 2026 was, are we going to continue to see the emergence of the Magnificent Seven eating up 53% of the S&P 500 overall growth, or are we actually going to see some diversification into other things that might have some budding potential, like digital assets? So there you go. That's your overall for take this one. And I guess the last point is, shout out to Jerome Powell. He's going through some stuff right now, and we have named his replacement finally, but that guy still has to get confirmed by Congress. So nothing's a done deal on that one. If you guys are interested in anything that we've talked about here tonight, you can find more of it if you head on over to our private Telegram. That is where you can find us, our exclusive live streams, and ask us any questions that you want. To find it, head on over to walktheblock.ndf.com, or you can find our links on any of our socials. But over there, that is where you're going to find the best, most exclusive access to us. We have a fantastic community over there. Those guys have been blowing up lately, whether it was Venezuela or the SEC stuff coming out. But yeah, we're keeping up to date with all that stuff. As we like to say over there, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&As. Go from beginner to intermediate to expert with us. When we all work together, we can all win together. There you go. That is what we got for you tonight. Ladies and gentlemen, we will be back next Monday, 8 p.m. Eastern time, as always, unless, yes, I push the start of the show as I'm collecting my final thoughts and getting ready for it. But outside of that, you can always find us free here on YouTube. We do appreciate it if you do the YouTube pleasantries, whether you like, comment, or subscribe. Shout out to everybody watching on Replay Gang. We appreciate you guys just as much as all of our fantastic live viewers. Yes, I'm looking at you, Centurion 54X and Moonpill Rational Optics. Gentlemen, thank you so much for tuning in. And, well, until we catch you guys next time, hope you guys keep an eye on the markets and what's going on. And, well, stay safe out there and, just try to have fun. With that being said, good night, ladies and gentlemen.